Well, February was a solid month for job growth. The Labor Department says employers added 235,000 jobs last month, sending the unemployment rate down to 4.7%. And during the campaign, President Trump called the government's jobs data a hoax. But as Press Secretary Sean Spicer said Friday, the president is now singing a different tune.
I talked to the president prior to this, and he said, to quote him very clearly, "They may have been phony in the past, but it's very real now."
All right, Friday's report also gave Wall Street a boost. The Dow Jones, S&P 500, and NASDAQ all made gains to end the week. And to break it all down for us, break down all of those numbers, I'm joined now by Yahoo finance columnist Rick Newman. Rick, good to see you.
Hey.
All right, how much credit should the Trump administration get for the jobs report and the rally on Wall Street?
Hey, they get some credit. Obviously, we've had a pretty strong job market for a while. President Trump inherited an economy that's pretty strong and getting stronger. We've had good job growth, close to around 200,000 for the last few years, actually. 235,000 is a great number. Of course, when we talk about the stock market, things we've seen there's a lot of anticipation of some things Donald Trump's going to do that investors think will be good for businesses and good for profits. So that's boosting confidence, and it's a pretty good time right now.
All right, stocks have been rising steadily since the election. Is the market due for a correction soon, and what might trigger it?
Well, obviously, if I knew that, I'd be moving my own money around in accordance. I'll put it this way, though. Stocks have risen about 11% since Trump won in November. It's obvious that investors are anticipating some changes, such as tax cuts on corporations and perhaps on individuals, perhaps some infrastructure spending, other things like that, deregulation, that in theory ought to be good for stock. Now, there's the question here is how much will Trump actually be able to deliver? And it's possible that markets are anticipating more than Washington is able to get done. And markets may also be anticipating that this is going to happen sooner than it actually will. So there is something of a disconnect when you talk to people in Washington. How long is this going to take? How plausible is all of this? It does seem the markets might have gotten ahead of themselves, so nobody knows what the stock market's going to do. But it could be close to a peak for now.
All right, Rick, the Federal Reserve is expected to announce another interest rate hike at its meeting next week. What's the impact of continuing to raise rates?
Well, the good thing about this coming rate hike is that everybody knows it's coming. So I don't think anybody's going to be blindsided. Fed Chair Janet Yellen has been pretty clear about this. The Fed has to raise interest rates because the economy is just doing great. The things the Fed watches have been going the right way. So one thing people need to pay attention to is mortgage rates are going to creep up eventually. They already have. So if you're thinking about buying a house and everything else is falling in line, probably better to do it sooner rather than later. People who want interest on the money they have in the bank have been complaining for 7 or 8 years that they just can't earn any interest on that. Those interest rates on bank deposits are going to creep up very slowly. Those are longer-term rates. They're not going to go up to 4% anytime soon, but they will start to creep up a little bit.
And you gave us some tips, a couple of tips. So the stock market is hot and companies are adding jobs. What other advice would you give us, the average Americans like myself, to best take advantage of the current economic climate?
I'm not an investment advisor, but we have them on all the time on Yahoo Finance, and every single one of them says don't try to time the market. You just cannot anticipate what's going to happen. Keep in mind, try to have a sensible plan. Keep in mind, this has been an 8-year stock market rally, and it's a very good bet that the better part of that rally is behind us rather than in front of us. So if you have not been in stocks for the last 8 years, you missed out, and just because you get in sort of late, that doesn't mean you're going to catch it. So just have a sound investment plan. Don't get thrown off your plan. And don't get too crazy when the stock market goes up or down.
Hey, sounds pretty good to me. I'll take your advice. Rick Newman. Rick, thank you.
Sure thing.